In this video, I'm going to talk about the 2022 Calgary Real Estate Board forecast. Now, I am in no way, shape, or form an economist, and I'm definitely not a fortune teller. But what I do believe in is providing my viewers and clients with value-driven content. Hi, my name is Adam Fife, and I'm a local real estate agent here in Calgary, Alberta, and I am very excited to showcase this forecast with you in today's episode. So without further ado, let's get into it. Now, on the very first page, we're going to talk about the summary. Housing market sales in 2022 are expected to moderate relative to record levels of activity in 2021, while remaining stronger than historical levels. Rising lending rates are expected to cool some of the demand later this year, but rates are still exponentially low, supporting strong housing sales, especially from those experiencing increased savings and equity gains throughout the pandemic. Economic improvements are also expected to improve both job and population growth, adding new sources of demand for housing. Overall, all of these factors point towards a relatively strong 2022. So the next slide here is going to talk about forecast risk, inflation, lending, and COVID-19. There is significant uncertainty in the economy as the impact and duration of the ongoing supply issues in the market are unknown and somewhat dependent on further disruptions caused by COVID-19. At the same time, energy prices are expected to rise. Higher energy costs, along with longer than expected supply disruptions, could result in higher than expected inflation. Supply levels are expected to improve relative to demand. However, renewed confidence in the energy sector plus new industry growth could result in stronger than expected housing demand. Now, on the right-hand side, you will see some top downside risk and some top upside risk. So the downside, earlier and higher than expected increases in lending rates would pose the most significant downside risk to the housing market. On the upside, should the housing market take longer to return to balanced conditions, meaning it's a seller's market, we could see stronger than expected price growths. Economic update. Despite risks surrounding the pandemic, the outlook of our economy is far more promising than it was a few years ago. And funny enough, I actually touched on this on a recent video here. With renewed optimism coming to the energy sector and growth prospects in the tech industry, improving economic activity, job growth, and the slow return of migration to the city are expected to continue supporting relatively strong housing activity in 2022. Higher prices have improved the profitability for many companies that have struggled since 2014, and increased production and drilling are expected this year as well. While conditions remain far from 2014, this shift is welcoming news for Alberta's largest industry, which is oil and gas. Thanks to the energy prices that were far better than anticipated, there have been some improvements in the energy sector, which are expected to continue into 2022. The energy sector remains important to a Calgary economy, both now and into the future. However, announcements from several tech companies planning to set up offices in the city signal an important shift to diversification and optimism regarding future growth. Since the second half of 2020, the housing market has thrived, but much of this activity has been driven by existing population. Since 2015, we have seen more Canadians leave Alberta for other parts of the country. As the third quarter of 2021, Alberta finally started to see a shift in population figures. After 5 consecutive quarters of losses, net and provincial migration improved and international migration returned to levels not seen since the fourth quarter of 2019. Moving forward, Calgary's population growth is expected to continue to outpace provincial growth rates, supporting housing demand in 2022. Interest rates and inflation. Rising inflation and the debate about whether it's temporary are creating some uncertainties in the market. Persistent inflation has implications for lending rates, impacting businesses, consumers, and the overall economic activity. Forecast varies, but mortgage rates are expected to rise from 50 to 75 basis points. Again, this is only a forecast. Rising rates are expected to contribute to slightly slower demand in the housing market in 2022. However, rates are expected to stay exponentially low and remain stimulative for the housing market. Supply constraints, higher energy prices, rising food and shelter costs all contribute to our current inflation. Employment. Following the dramatic decline in jobs in 2020, it is not a surprise that employment levels increased by over 4% in 2021. Employment gains since September, in particular, were exponentially strong in Calgary. As of December, employment levels pushed above 833,000, higher than pre-pandemic levels, and just shy of peak employment that occurred in June 2019. Employment gains are expected to continue in 2022, with annual gain forecasted to rise nearly 5%. To date, wages generally have been trending up, but not necessarily at the same pace as inflation, impacting growth and disposable income in 2021. As we move into 2022, wages are expected to rise, supporting gains in the housing income. So next you'll find the 2022 employment forecast by industry. Now I'm not going to talk too much on this, it's pretty self-explanatory, so feel free to pause the video if you want to see more. New home construction. COVID-19 created challenges for home builders early in the pandemic. Lumber prices soared, adding to construction costs. Price levels have since come down from those highs, but the industry is now facing a number of product and material shortages that are causing delays in home completions and increasing labor and material costs. With only 11 months of data available in 2021, starts have already exceeded the forecasted levels for the Calgary CMA. While starts are forecasted to ease in 2022, activity is expected to remain high enough to support some modest improvements in new home supply levels. So here's a quick blurb on rentals. Low lending rates and weak migration figures due to the pandemic had an impact on rental markets, causing vacancies to rise in 2020. Investors are betting on a rise in rental demand and rates as rental starts in Calgary rose to 2,616 units, with 1 month left of data in 2021, the highest year-to-date total on record. So here's a quick 2021 review. Housing market activity in 2021 far exceeded our expectations, as sales in the city surpassed record highs set back in 2006. Both sales and prices were expected to improve, but the annual pace of growth was far stronger than forecasted. Demand was exponentially strong throughout the spring as expected, but supply levels did not rise enough to meet that demand, causing stronger than expected price growth. The pace of sales growth did slow through the later half of the year, but the growth was still stronger than the gains in new listings, preventing the market from returning to balanced conditions. The persistent sellers market in 2021 contributed to an annual price gain of over 8%. After significant price declines for the better part of the past 5 years, the shift towards a seller market condition helped support the recovery in home prices. Home prices hit new highs in the detached and semi-detached sectors, but improvements in the row and apartment sectors were not enough to support full recovery. So why was demand so strong? Last year saw some of the lowest mortgage rates on record. Levels did not rise from the lows reported earlier in the year, but rates remained far below what was available in the market before the pandemic. This was one of the main drivers for the strong housing demand recorded in 2021. Housing in 2022. Rising lending rates and higher home prices are expected to slow demand in 2022, bringing sales down from 2021 record highs. However, overall levels are expected to remain higher than long-term trends, reflecting a strong demand environment. The challenge in 2022 is expected to be related to supply. Starts activity did improve last year, which should help with overall housing supply in 2022, but sales supply may struggle to remain an adequate level to support balanced conditions throughout the early part of the year. Overall, citywide annual prices are forecasted to increase by over 4%. So the last slide I'm going to touch on is the coast-to-coast comparison. Housing activity has thrived across most of the country, with strong gains in sales and home prices. Some markets are facing supply challenges prior to the pandemic, and the sudden rise in demand caused further tightening, resulting in significant price gains. So take a moment to pause the video and just check out a couple of the major metropolitans in Canada. Finally, on this slide, which is the summary, you can see some numbers here. Now, this is just a very quick, brief snapshot. If you want more in-depth numbers, we do come up with this stuff every single month, and I will be making more videos on them monthly. So that's it for this slide. I really hope you got a little bit of information from that. Feel free to contact me here below or create an account on my website to get more information like this. I hope you enjoyed what I was able to talk about, but until next time.